Today is Thursday, February 2nd, 2023. Back for another daily review. What a day we had. What a week we had this week. A lot of bullish expansion. And before we get into today, real quick, I just wanted to give you a quick look into what I've been playing around with. This is fxreplay. It's this new backtesting app, and it's all web-based, basically like TradingView. It's very user-friendly. It's a very familiar interface. You can do everything pretty much that you can do in TradingView. You can draw your boxes. You can have your lines. You can make presets and things like that. And so it's just very user-friendly and very fluid for the most part. But what's really good about it comparatively, because I used to do stuff on TradingView, like try to backtest on TradingView. But what's great about this, aside from just the overall feel, is that you can do multiple time frame, and you can play it out, and it'll advance on both time frames at the same time, which you can't do on TradingView. And then to execute an order, all you have to do is use your risk to reward tool, something like this, and then you can click place order, and you can see down here it keeps your track of your stats. And you just go place order, and then it brings up this little menu. You can control your risk, and you can do a limit order, market order. Let's say you do market order. I don't know what this is. And then you can choose how the candles advance. If you want to go in 5-minute intervals like this. Now I'm in the trade, and let's see. So now you can see it's showing your current P&L. Let's see if I win this one. You can also move your stop once it starts moving in your direction. You can click it to go to break even. So they keep coming up with new little updates to this, but that's pretty cool. It's been a pretty fun. I haven't spent as much time into it as I would like it, but I plan to get more into it now in the future. I do think that they need to add the support where you can do S&P on the left and NASDAQ on the right, just to simulate how I like to trade. I know they're working on a feature like that, so I can't wait for that to come out, because it would be really cool to actually. Now let's move to break even and see. Let's see if I win this trade just for the hell of it. No, I got taken out. You get the idea. It's pretty cool. If you're interested, they do offer a 5-day free trial, and you can get 15% off your subscription if you use the code $Dan. So just wanted to let you guys know about that. Okay, back to the chart. So look at what happened today on NASDAQ. Just playing it from today alone, we can see that we had our consolidation during Asia, very strong breakout on the hourly, 3-candle pullback to Asia high, expansion higher. This was during most of the London session. And then we pushed up to this daily volume imbalance. So backtracking a little bit, in my last review, I was really only aiming for this lower one when we were like down here, whatever day it was that I did my last video. And so we after FOMC, which wasn't a huge surprise that you could get huge moves in FOMC, it really went way beyond that. Although you can see that we did close bodies respecting this level of the volume imbalance. And then we had this one above, and then there's actually this one here above that, where price ultimately made the high of the day, possibly high of the week. We have to imagine that that's likely that we've seen our weekly expansion complete at this point, meaning that if we go to the weekly chart, we can see that we've had this big wide range weekly candle, and I would argue that the odds are that we've seen the extent of our weekly range, which means that if we are going to trade Friday, which probably not because it's non-farm payroll, well, I guess because it's non-farm payroll, we could expand higher again and go for this high, this weekly high, this old weekly high right here. But I think more likely than that, the market retreats down and maybe fills in. We have this big gap here. Doesn't have to go all the way down here, but maybe this daily volume imbalance, which we have this 4-hour inefficiency as well. And now we have lost this. So we have 3 daily volume imbalances. This one, which was the high, which I showed you. This one down here, which I was the one that I was saying I was targeting at the beginning of the week. And then we have this one in the middle. So now we've lost the middle one for now, although we're in Asia session or overnight. So hard to say until we get to New York. But let's see if this holds as resistance. We have this opening gap here, traded up, then delivered back down, came back in to this, and then has left it since. So I do expect this to be some sort of resistance, or wouldn't be surprised if it is. And then if we go back to the daily, we can see that we have a lot of volume imbalances here. So this one, of course, can be traded to again, but now we have this fresh one right here. So if I were trading tomorrow, I would keep an eye on this previous day's low. I do feel like we are more likely to hit that at this point in the game rather than like, let's say, make a new high. So that's sort of how I look at higher time frame, just kind of, especially when we are several hours away from the beginning of New York session. So replaying today a little bit more closely, I didn't get into any trades, even though I tried to. For starters, at New York Stock Exchange Open, we were right. What was this? This is the 930 candle. Okay, so we were at this volume imbalance. So I was just curious to see what we would do. And even though we did have, as I posted about it, we did have a type 1 liquidity grab. So it's not really my ideal. Narratively speaking, this doesn't really do much for me. This low, but we did have technically a lower low on Dow. So you could say this is doing the liquidity grab. And then we see relative strength with these higher lows here on S&P and NASDAQ. But just the narrative wise on this, it didn't make sense. Like what I don't know. I just didn't understand what was going on with Dow. It's just so different from those other two. So it wasn't like a no-brainer trade for me. And, I'm a little cautious, especially on FOMC weeks, the Thursday before non-farm payroll. But I'm not surprised that we did come down and we did reject off of this order block here. These two down close candles, these 30-minute candles that total an hour. So we have this down move that created this imbalance, broke structure. At the open, we come back down, type 1. This would be our optimal trade entry. You can see if we did our low to high optimal trade, came right down to the 70, and we actually hit the extension beautifully at the high. So that's that. So that's what happened on at the open for the opening range. Now I did look to see. First of all, very interesting to see how the bodies of these candles respect the volume imbalance. So we did wick below it a few times here, but didn't even come to this low. So if you had bought this order block, or this fair value gap, that could have been an opportunity. Now you did have a false start type of situation too, I think, although I don't know if there was divergence on S&P or not. But let's just see if there was an entry. Yeah, so that would have been the other entry a little bit later, closer to 930. So false start, market shoots up, not a super clean move up and then down, then up and then down again, took out these lows. So it's not really like textbook in my opinion, but we did respect with the bodies this volume imbalance and then pushed up, cleared this high, created this fair value gap. So this would have been the entry. I think ICT was trading this on YouTube or on Twitter. But I don't follow him too closely during the week. But, something like this could have been a fine trade targeting. I don't know where I guess if you really felt bullish, you could have targeted that. I would have probably just done 2R, 3R, something like that, unless there's some liquidity target that I'm not seeing anything obvious. So we were there. So, just maybe this imbalance. So there's definitely reason for price to go up higher. But in any event, let's go down to the afternoon sessions. This is where I tried to get involved. Not here. So in the afternoon, we had and I will turn on the indicator. Okay, so I have this. So we have a clean break above the DR high. And then it just became are we going to come back to this level or are we going to do a liquidity grab higher up? And that's what happened. So if we went and looked at this swing low that was created. You know, once the market makes a new high here, people buy and they put their stop here, and the market comes down, takes them out, and now we're at the lunch hour. So the very beginning of lunch, and I guess we're working through lunch today in this type of environment. So the market takes the low here, pushes back up with imbalance, and I did not have these standard deviations on my chart. So my chart just looked like this at the time, and I was pretty happy with just going with the order block. But in hindsight, if I had just used this standard deviation, so if I go back and put on the labels, we have, see how we like kind of work these standard deviation levels. And then again, displacement up leaves this gap. So I could have had my order right at the 2 standard deviation fair value gap, and then taken that up and went perfectly to this extension, which had this volume imbalance. I would not have taken it that high. I would have just taken it probably to like to this one, 3R. I think it was 3R that I was aiming for. But anyway, market pushes up, hits the volume imbalance. Let's turn this off, and we get our sell-off towards the end of the day. I do feel like it's very cool to see how price behaves around these volume imbalances. So here price comes up, perfect rejection off of the volume imbalance, sells all the way off. Now this is even better because it has our structure, our order block, and fair value gap. So we have this down move for this big up move. Price comes back down, and now we have the volume imbalance with the order block with this imbalance right here. So many confluences stacking up together, and we have the big figure 12,700 level. So several factors would have made this an interesting level to buy. Price hits it, spikes up, another run. I think this was right when earnings or before, around earnings time. I'm not even sure. Big rally up, runs this high again, breaks down, and now we've kind of lost this level. So that's where we stand right now. I wonder if there could have been a lower time frame entry on this reaction. So let's go down to the 1 minute, and you can see price trades down, displaces up. So you could have had an order here, although this would have clearly, this looks like, it just goes to show you that when you're in a trade and you're in early stages of a trade and you get some big candle, it doesn't always mean that you're in trouble. So I do like seeing stuff like this just as a reminder that, hey, you can be, you could buy this. But it is a reminder too why I generally like to put my stop below the low. I know some people will do below like the order block, or even, really tight below the imbalance or something, but just gives you a little bit of a cushion. And when you have this volume imbalance, price could come in and tap it again. In any event, we see this rally. The next level, we take out this high. We could have gotten a fill here on this gap, on this candle. I like that after we break this structural high. So 1 high, 2 high, 3 highs broken. We are into this imbalance, but again, coming off of this higher time frame level with all the confluences we outlined. And that's it. That's all that happened today. Again, we'll keep our eye tomorrow on this volume imbalance and these levels here below. So hope you all are having a good week. And until the next video, keep grinding.